Now we need to understand some terminologies. Investors, traders, brokers, regulators, and all the further terminologies, we will go through it. So I just told you before that what is investing and what is trading. The person who invests for a long period of time is known as an investor, and a trader is a one who trades for like buys a stock and sells it for a very short time. Then he is called a trader. It could be minutes, it could be seconds, it could be hours, it could be a few days. So he is known as trader, where investing is a long-term game. Now let us see what are brokers and what are regulators. You can read all this, the definition and the functions of the investor and trader. I have explained you everything. Now you can just read it once. This will be your homework. So now let us see who are brokers. So brokers are like if you want to buy a share or buy a stock. For example, if you want to buy a house, you will not know like where's the house, who is selling it, at what price he is selling it. It will be very difficult for you to individually go and buy houses. So what you will do, you will hire a broker. He will find out all the houses in the locality which you want, and then you can give a brokerage to him, and you can make this deal happen with the help of a broker, right? So brokers are available like in many cases, whether you are renting or whether you are buying a flat, and in many cases. So in stock market, brokers are also there. The brokers are the intermediaries that facilitate security transactions between buyers and sellers in financial market. For example, there are millions and billions of shares that are trading in the stock market. So like if a share is worth 100 rupees now, and now someone wants to sell it at 105, someone wants to buy it at 105, he thinks that it will go 110. So somebody is selling the share, somebody is buying the share. So they are the intermediates, that the person who is selling it, they'll connect to the person who is buying it, and they'll keep a small commission in between, that is known as brokerage. They'll keep a small brokerage to perform this trade, to buy and sell orders. Some brokers also give some investment advice and some personalized and customized feature. They can give you calling facilities, that if you don't know how to just scroll on the app, or you don't have time, they'll just give you advice, or they'll do your what you want to do, like buy or sell, they can do it on a phone call. So these are brokers, and they charge brokerage for this. Now let us talk about regulators. See, if something is happening, so there should be someone who keeps a watch on it, who monitors the market, like everything is going correct or not, whether some unethical practice is being taken place or not, whether to punish the person who is doing some unethical work. So basically the government of the country is a regulator of the stock market of whichever country it is. Like crypto has no regulator, so that's why people think it's very risky, that there are no rules, or it could just crash one day. Like in stock market, a particular stock, if it falls, there is a seizure, that it can only fall 20% in a day, it can only increase 20% in a day. It will not happen like 100 rupees stock goes to 200 the same day, and it can also go from 200 to 20 rupees in the same day. This will not happen, because it is set by the regulator. Some rules are set that is needed to be followed. So now let us talk about regulators. Who are regulators? So regulators, basically they enforce law and regulations governing securities market participants and financial intermediates, that any broker is not doing any unethical practice, or any trader, like there is a thing known as there is an unethical practice insider trading. I'll tell you about this. Now for example, I work in a company ABC, and I know that there is going to be a merger or something, a good deal is happening tomorrow, which will come in news, and so my company is listed and the share price will increase. So I know this information because I am the employee of the company, and I tell my other friends or family members or relatives to buy this stock beforehand, so that we could sell it at a profit. So this is insider trading, that if a person knows and he gives tips to other that buy a stock and you'll get profit because this is happening. This is not legal. This is insider trading. People are now punished for this unethical practice. There are a lot of unethical practice that can take place in stock market. To regulate this, to make sure that everything goes right and everyone follow the rules, the regulator is very important, that there is no fraud or manipulation of a stock. Like if someone has a lot of money, like for example a company is worth 20 crores and someone has 50 crores, he can easily manipulate the valuation of a company. He'll keep on buying. He'll pump and dump. He'll pump the stock and he'll sell at a peak, and then he'll dump the stock. Everyone will, the rest of the people who invested, they will lose the money if someone had bought at a higher price. So pump and dump strategy and some unethical practices, that is banned by the regulator. So in India it is SEBI. The full form of SEBI is Security and Exchange Board of India. It is a regulatory authority responsible for overseeing the securities market in India. It checks for all the unfair trade practices. This is the building of the SEBI, you can see. And likewise in USA, Securities and Exchange Commission is there, SEC, to check for all the manipulation that if it is being take place.